Okay, good afternoon, everybody. Good afternoon. Apparently my microphone works. Thank you all for coming this afternoon. We're going to talk a lot about uranium, what's going on in the market. I know there's a lot of talk these days about what's been going on, and we're going to talk about how it's affecting investments and the mining sector and any and all things. And I'll just point out, if anybody has any questions while I'm going through any of this, anytime, feel free to disrupt me. You won't throw me much, but we'll take any and all questions as we're going along. A couple of things about uranium, if you're new to this, and a number of people are. There's some attributes to this commodity that are a little off compared to others. I mean, first of all, the price is fairly inelastic, and that is the amount of fuel, the cost of the fuel in generating electricity is a very small component of that electricity. So unlike oil or coal or other fuels of that nature, so the price of uranium can go up and down, and it won't really affect the cost of a kilowatt hour in the same degree. And as such, the utilities will buy it at whatever cost it's available at. So they're not going to start moving around to different fuel sources on the spur of the moment. The other thing is there's no formal exchange. So when we talk about the price of uranium, and frankly, there's only a small handful of orders happening in a particular week. So it doesn't happen on an exchange. These trades are made between utilities and producers for the most part. So there's no intermediary. There's no place you can go to actually see what it's trading at today. The other thing is it does lack liquidity. So again, we're talking about a couple of dozen trades in a given week, and that's what's making the price move. So there's not a lot of liquidity in that market, and on the in terms of the term market, I mean, what we see generally is the spot price, and the spot price makes up about 10% of the trades that are going on in uranium. The rest of it is all long-term contracts. So these utilities are contracting out the delivery of out 5 or 10 years, which leads us to the last point, is the price is really not very transparent because we don't know what those companies are contracting for out that time period. So about 60% of the uranium that is traded is done off market between the producer and the utility. And so we don't really see that price. So it means that the price we're always looking at and always talking about is kind of a hand waving. It's close, but it is certainly the only indication we've got, and that's what we follow. Now the real economic story behind uranium and why we're talking about it so much has to do with supply and demand. It's fairly simple. What you're looking at the bars at the bottom, those are the current mines that are producing. And this is their forecast out to 2040 as to how much uranium they will be producing on an annual basis. This was put out by the World Nuclear Association earlier last year. And the blue line represents the base case for demand. That's where they think demand is going. And you can see right out of the gate we're running short. So we've actually been producing 15 to 20% less uranium a year than we've been consuming worldwide. The lighter blue boxes there, those are the current mines that are in development. So that's how we see that mapping out over time. On top of that now, we put out those mines that are either planned. Oh no, I'm going to back up. I got that wrong. These bars here are the mines that are being brought back on. I mean, when Fukushima got hit with the wave and they shut off a lot of reactors, and Kazakhstan was supplying the market with way too much uranium, a lot of mines got shut down, production got slowed down. So that color there really represents those mines coming back online. The next bar up, those are the mines that are in development right now. And when we get into the gray, it's truly a gray area because those are the deposits and things that we hope and pray will come online as it moves along. But you can see we are still running considerably short. Now, when the WNA put out these numbers, they actually put it out as a band. So there's an upper scenario and a lower scenario. And even the lower scenario is, I mean, if everything happens perfectly, if we get the worst demand and the absolute best supply, we'll be skipping along the top. but it demonstrates what we're talking about. And the other thing is, when these numbers were put out, they didn't have 2023 and 2024 numbers, so the supplies we're actually about 10%, 11% behind on the supply side already. Now, what's been happening, I mean, over the last year or so, what's really accelerated things and what has people more interested is that there's a lot more news happening that's making both of these things move differently. I mean, on the demand side, we're talking about AI, we're talking about data centers, we're talking about Microsoft and Amazon getting involved in these things, small modular reactors, to the extent that they really are truly going to be adding to the demand. On the supply side, though, you know, we've seen a military coup in Niger that's slowed things right down, and mines having to get shut off there. We've seen Kazakhstan, who produces 40% of the world's uranium, is now committing most of that to China and Russia, which is creating this, what we talk about is this bifurcation of pricing. There is what is forming is an Eastern and Western market for uranium. We've seen the U.S. put up sanctions against Russia, so we can't bring in that uranium anymore. Russia actually, they enrich and process about 40% of the world's fuel, so they're the ones turning that U3O8 into fuel. And the U.S. now has a moratorium on that. And the U.S., who has 25% of the world's reactors, gets half of their fuel right now from Russia and Kazakhstan and Uzbekistan. So those sources of fuel are at risk. And of course, we've seen Russia kind of reciprocate and say, well, if you're not going to buy our uranium, we're not going to sell it to you. So that's been going on. So these are the things that are actually making this scenario, well, better if you're looking at the price of uranium, because it's a fairly simple grade 10 economic model. Demand is up, supply is down, and the price continues to rise, which it's been doing. And this is the spot price of uranium, and this is going back to the beginning of 2023, so almost 2 years back, and it's the percentage change in uranium since that point in time. It was about $48 back here. It's bounced off like 102, 103, come back down. This is what's been going on the spot, and again, it's a smaller part of the market, but it's the number that we see on a more regular basis. It comes out more or less on a daily basis. The contracting numbers we see really only get added up at the end of a month. So it's not that visible or transparent. And as we've seen people talking, certainly in the last, on a lot of these panels, is that separation of the commodity price from the equity prices. And we've certainly seen that in uranium. So what I'm going to show you here, what these graphs represent is the change in share price of uranium equities, North American uranium equities. The top number is the producers. And what we've seen is that the producers more or less are following that red line. They've been getting the bump from uranium prices going up, and why not? The world needs uranium, and they've got uranium. They're producing it. They've got it. The green line's interesting because this is the developers. So these are you can see they're having the same sort of movement. And we're looking at an average of 11 developers here. So some are higher, some are lower, obviously. But you can see generally what's happening there. And they're certainly not getting the same sort of joy. The market is, you know, looking at the risk associated with that. Now, if there's one company called NextGen, which is a bit of an outlier if anybody has been investing in uranium stocks, and you'll see NextGen has got probably one of the biggest not producing mines on the planet. It's up in Saskatchewan, and they're actually acting like the producer line. But again, they've got this massive deposit. It's in a happy jurisdiction up in Canada, and there's no way it's not going to get produced or developed. So, and they're going into construction next year. So they're operating up in this line. If you pull them out of this line, you actually see that this goes down significantly to about 10%. So yes, there's some people are doing very well, some people aren't doing very well, but by and large, on average, developers are up 10% over the last 2 years. Now the bottom line are the explorers. There's 18 explorers in there, and again, you can see that as the price of uranium is going up, they certainly aren't. And a lot of that has to do with the fact that we have all been raising a lot of money over this period of time. So the dilution that's been caused by the raising of money to put in the ground, and we'll talk about that, is outweighing any lift we're getting from the commodity price. But this is how things are kind of laying out, and I think it's as people would expect to see. So let's talk about where we operate, which is in Canada, in northern Canada, in Saskatchewan, up in this area. This is where all of Canada's uranium comes from, and it's an interesting place. We all talk about the Athabasca Basin and about the crazy ore grades up in that area, but it really is more than that, because in the last 6 decades, we've actually found 38 different deposits. There's been 2 billion pounds of uranium found in this area, and they've averaged, something just shy of 10% grade, all of them. And when I say that there's one coming out approximately every 18 months, that's actually working out to be true. It's not we found 12 one year and then there was a drought for 8 or 9 years. It's pretty much every year and a half somebody finds something new. And I mean, the last one was IsoEnergy found a deposit called the Hurricane Deposit. It's close to 50 million pounds, but the ore grade is 45%, which is nuts. That's freak show. So it's an interesting area. Most of your exploration companies you're going to see are working in this area because it's fairly prolific, but it's continuously rewarding us with new deposits, and that's why there's such a focus on this area. It's the grade and the proliferation of it right across the basin. So as an explorer, which is the world we live in, we start looking at, well, so what's it take to find one of these things? And so you go back and look in the last 20 years, and there's actually been $3 billion worth of exploration spent in northern Saskatchewan on uranium. And during that 20 years, we have found about 700 million pounds of uranium, which is $3 a pound, which isn't too bad for a cost of discovery, except for the fact that 700 million pounds was found by 6 companies, and that $3 billion was spent by hundreds of companies. So it's not always an equitable trade. So to look at what did it take to find those pounds, because we know they're out there, and we've seen that there's a lot of commonality in terms of where these pounds came from and why. These are the 6 deposits that were found in the last 20 years, equaling our 700 million pounds. And the first thing that's quite evident is that the companies that were looking for it were working a lot of property, right? They didn't have a project that they were poking the heck out of. They were working a number of properties across a fairly large portfolio size, typically in excess of 200,000 hectares. And this goes back to UEX, who found Kiena back in 2005. It's 51% owned by Orano. They haven't been developing that deposit, but Denison Mines, they're just getting hopefully closer to the end of, or closer to production on their project, which was found back in 2008. Hathor, which is now owned by UEX. They bought it, Hathor was bought by Rio Tinto, who then sold this project to UEX. Fission Uranium, the Triple R deposit, fairly sizable deposit. Next Gen we were talking about, a lot of pounds there, and then most recently ISO. But what we do know is they were working a lot of property. This is not a Hail Mary. This isn't throwing darts at a board. You've got to have a lot of optionality when it comes to this stuff. The second thing, which is really what we'll come back to because it's the big issue, is that it takes a lot of money. It takes tens of millions of dollars just to make a discovery hole, and that's what we've seen time and time again. All of these companies spent significant amounts of money before just finding it, let alone taking it to a resource. So if it takes you $10–20 million to actually find something, it's going to take you another $20–30 million to actually turn it into a resource. So it's very expensive. You don't find these things unless you're prepared and able and capable of spending a lot of accessing the funding required to find these things. The other thing is how it's spent. And this is the challenge we have is that most investors don't really perk up until they see that we're drilling. And because that's when something fabulous could happen. But there's a very lengthy process that gets to drilling. One drill hole can cost as much as an entire geophysical program. And you can't afford to just blanket northern Saskatchewan with drill holes. So we do start with a lot of, the cheaper work. There's a lot of history, a lot of work that's been done years ago on a lot of these properties. We can get out there and walk the property. There's a lot of things you can do from the surface around soil sampling, vegetation sampling, rock sampling. Rock sampling was how they actually Fission found its project, chasing a boulder train at surface. Then you're flying airplanes, you're doing airborne geophysics, ground geophysics, and then finally you're drilling. And even the initial drilling you're doing, these are developing targets to drill. You really don't know what you're looking at until you poke a hole through it. So that first pass drilling, again, is really exploratory until you find something. So if the money isn't being spent correctly, you're also going to run out of it. And a lot of companies are kind of put in that position where their investors are yelling and screaming to get a drill out there, but you're really not ready for it. So that's another thing we watch closely. And finally, you have to have persistence. This is what you're seeing here is the number of drill holes that were drilled on that project before they actually made the discovery hole. So, ISO drilled 43 holes before one came up with a zinger, 21, 22. I mean, you've got to have a pretty steady hand to sign the check for hole number 249. It does take persistence to find this stuff because, again, as you're drilling, you're chasing something. You're finding things to chase, and you're not going to find it in your first drill hole. So, these are the components. If you're, as we're looking at exploration companies and how they're going to get from A to B and how they're going to make a discovery, they've all traditionally, historically needed this, needed all of these components. There's no shortcuts to this, and that's a challenge. And it's particularly a challenge around the access to capital, and that's kind of where we started talking about this disconnect here, because the market, what we've seen is that the market is only rewarding companies after they've proven themselves. So if you're a producer, you've proven you've got uranium. If you're a developer, the thing with the development companies right now is all of these companies that are developing mines have never developed and mined and produced uranium before. They're doing this for the very first time, all of them. And even if the company's done it historically, the people that are involved today weren't around then. So the market is making sure that they're still not de-risked, right? And they got to prove themselves before it happens. Same goes with exploration companies. When you do make a discovery, when you do poke a hole through something, the market does reward you, but not for very long, because you need to be back again and do it again and keep that momentum going. And we've seen 2 or 3 good examples over the last 3 to 4 years where somebody looks like they're coming into something big. 2 years later, it's not looking as good as it used to, and the market's taken all that value back. So, the 2 things we're coming out of here is we're seeing that the exploration companies are raising money and equity and diluting themselves faster than the uranium prices are keeping us afloat, and that's a problem. So what we need as an exploration company is you need to find sources of capital that are reliable and financially stable, that have got better balance sheets than you do, that are serious and accountable. Because if I'm an exploration company that has one project, that's my best project, and I will always tell you it's the best project. You don't have anybody necessarily putting money in beside you telling you that that's enough is enough. And it's got to be non-dilutive in some form or fashion. We've got to find a way to reduce the dilution that's being caused right across the board on these exploration companies, because they haven't got the legs and the runway to actually make a discovery, let alone once they find it, to keep going and turn it into a resource. Isn't that a sad story? Okay. So here's what we've done, and this is why right now in this market, with what we've seen going on, and is very different than what we saw back in 2004, 2005, we've had to, we're looking for ways to deal with this, and this is the way we're doing it. Right now, this is what you see there in orange. Those are our projects in the basin, the Athabasca Basin. This is the primary mine trend. This is where all the current uranium comes out of here, and there's all kinds of geological reasons I could tell you why it's there. Over on the other side of the basin, over here, this is where NextGen and Fission have found about 350 million pounds of uranium. So that is really turning into a zone as well. And you know, what you're seeing here is that we have been able to assemble, you know, district scale projects in some of the best places in the basin, because I can tell you it's not a big flat sheet of uranium out there. The other thing we've done, which now leads into, you know, what we think needs to be done, is most of our projects are now in joint ventures, and they're in joint ventures not with other folks like ourselves, but people with better balance sheets than ourselves. Our Smart Lake project on the far right is a joint venture we have with Cameco. Next over Hook Lake, which is on trend and right off shore of NextGen and Fission, we joint venture with Cameco and Orano. We just announced a joint venture with ISO Energy, who's developing projects primarily in the States, but they own that Hurricane deposit we talked about, and we've taken our collective exploration projects and put them into a single joint venture, 50-50 joint venture. And what is differentiating this scenario for us is that we operate all of these projects. So we are the exploration team on all of this work, and we get paid a management fee for that. So we can see as much coming back to us as we'll cover our overhead. So we've got that working for us, and we've got other partners who are carrying a lot of the freight financially. And we also know that as long as they're putting money into these projects, that they're validating the potential of those projects. Because I can tell you, these guys can't free up budget for exploration unless they can demonstrate that it has the potential to come up with at least 100 to 150 million pounds. They've made us walk away from a few things because they're too small, throw them back in the water. So, you know, this is the model that we think gives us the opportunity to, you know, reduce the dilution, to actually put money against our best projects, not our non-core assets. It validates these projects for the market, and it keeps us very busy and very involved with exploration right across the basin. Now, for every dollar that's spent per hectare on our joint ventures, we're spending about 32 cents, 32% of that. So, yes, we still need to raise our own money. We still need to carry our piece of the action, but it's certainly not 100%, and it's certainly not on one particular project going forward. So I'll walk you through a couple of these projects. This one's Hook Lake. It's one we've been working on for quite some time with Cameco and Orano. We own 21%. They each own 39.5%. We've proposed about close to 5,000 meters of drilling this coming year along two different paths we found. This is the project. Down here we've got Fission Exploration, or Fission's Triple R deposit. Now Fission is in the process of being acquired by Paladin. It's under review by the Canadian government. But there's about 115, 120 million pounds there. So we move up here. This is NextGen's Arrow deposit. There's about 250 million pounds of uranium there. And this is, geologically, I can show you, there is a trend that runs up through here. We found a deposit here at the claim line called Spitfire, but as I pointed out, it was too small. We weren't going to add a zero to it, so we've moved on. But it's a fairly large project, and I don't know if anybody's watching. Oh no, that one's going to be over here. So I'll tell you a little bit about the area. These black lines are graphite in the basement rock, and that is our primary target when we're starting to look for uranium. We cannot pick up uranium through geophysics. We can only pick up the places where it likes to live. And graphite is one of those things. And it is easy to pick up through geophysics. This area has always been interesting just because of the sheer number of conductors, graphitic conductors and targets in the area. We've been, the first number of years, is particularly after Fission and NextGen started finding their deposits, most of our efforts were spent on this center corridor of conductors called the Patterson Conductor Trend. A few years ago, we started doing a lot more work out on this side what we call Carter. The thinking being is this blue area, this Clearwater domain, is actually the heat source that would have mobilized uranium. Without getting too deeply into it, we realized that this is closer to the heat source than this stuff. It would have been mobilizing uranium in this direction. And the other thing from this picture, it's a gravity survey that was done by the Geological Survey of Canada, is we've seen that wherever we have been finding mineralization, it's on the transition between the purple and the blue. So it's more in these yellowy, greeny areas. And so this, again, started to look far more prospective. So we've been out there over the last 2 years. We've been systematically starting at the bottom and drilling to the north. Last winter, we hit an area we call the lightning zone, where we started to come into uranium and a number of other indicators that would demonstrate that we're now coming into something far more interesting. So that is on the plate for this coming year for drilling as well. The other thing that's got everybody excited, I'll go back because this area I'm showing you here is here. Okay, so we're looking at this. So the Arrow, NextGen's Arrow deposit is over there. NextGen's more recently had great success over here in what they're calling the Patterson East. And what we now know is that these conductors, this is the black lines we were talking about, reaches up into our property and continues up here. We originally saw this conductor here as wrapping. I don't know if you can see it, but it kind of wraps around. We now see, based on this particular background, it probably wrapped right around this way. So this is where we found our Spitfire deposit. We've tested this conductor and not really found anything of interest. We've never done any work over on this one. So that's also on the plate for this coming year. And that's Hook Lake. So there's a lot of work that we can do and we'll continue to do in that area moving it forward. Smart Lake, which is a little further east, was originally staked by Cameco. It was always felt to be part of this deposit up here, the Kiena deposit. And you can see how these fingers kind of shift over this way. So this conductor where they were finding uranium, where the Kiena is, they felt were the same conductors as over here. We drilled that project 2008 was the last time. We've had one drill program. We did start to identify uranium and indicators there, but then all the action happened over on Hook. So Cameco said, let's pick up our money and go over there for a while. So we are now, for the first time in a long time, going back to this property, and we're going to be working up in the north here where we have not done any drilling. Right now, we've mobilized a geophysical crew who will be doing geophysics in that area, and then we've got 4 holes that we'll be drilling probably pretty early this winter. This is the property package that we put together with ISO Energy. It's a 50-50 joint venture. It's actually put together a lot of property that hasn't been looked at in this way in a long, long time. Their Hurricane deposit sits over here, and what we know is that the geological trend runs up and across the top of this property here, and it also takes a turn to the south and comes in and around here. So there's a lot of targets in there that haven't been touched. We own 100% collectively of this package of properties. The split, like I say, is 50-50. We're the operator. We'll be looking at spending about $5 million there in the coming year. And these are some of the details on that. We just announced this a little over a month ago. We're just finalizing the plans for the coming year. We'll be meeting with them in about a week or so to get approvals on the plan and the budget. And there we go again. So what we see coming up in the coming year, we're looking at, as I said, about $5 million with ISO on that package. Hook Lake, could be 3, could be 5. We're still finalizing plans with them as well, depending on what they want to prioritize. They're looking to prioritize the new targets we've found. We've got $1.2 million approved at Smart Lake. We have other 100% projects that we'll be spending a little bit of money on to move them forward. So we've got close to $10 million worth of work lined up for next year. That's going to cost us about $3 million. So we're quite anxious to get out there. We've got a great team that's going to be working this stuff forward. These are a number of our other projects I'll just mention without getting too deep into it. These are 100% owned projects. These two at the end are fairly large. Taverner is a fairly large. There's a whole story behind it. We're doing some final target definition there, and we'll be able to start drilling. Russell South, again, it's in an area that's been showing a lot of promise lately as well. We have a joint venture with Foran Mining. It's not a uranium story, but they're earning or buying the. Oops, where are we here? There we go. It's we actually optioned them, and they're earning in on a project that sits beside an on-trend, their McIlvenny Bay mine that they're developing right now. So they've been doing geophysics over that over the last couple of months. We'll be getting more data from them shortly, but they're earning in on that project, and that's kind of exciting as well. So that's us. We recently did a consolidation of our shares. We hadn't in 20 years. And we are closing a financing today of $2.2 million. ISO Energy is actually picking up $1 million of that. So we're very much aligned financially. And they will, when the smoke clears, they will be owning about 12% of Purepoint. We've got 20% held by institutions, but at the end of the day, the story for us right now, we know the challenge that exploration companies have. We know the upside when there's a discovery made, but we know how much it costs to get to that point in our lives. So, we like to put forward that we are really the trusted operator. We are the exploration team for majors, for the Camecos and Oranos of this world. We are working large projects, district scale projects that are right in the heart of Uranium Central. And we're getting that support, that financial support and validation from those partners who wouldn't put money into this thing if they didn't think they were in those projects, if they didn't think they were worth the time and money. And that's where we are. We put out a lot of information, a lot of content. If people are trying to keep up with the uranium market, on a monthly basis, we have a newsletter we put out, which is essentially all of the exploration news that's been going on in the uranium space over the course of that month. We actually do a weekly podcast. It's about 10 minutes long. Comes out on Tuesday mornings, and it's just the news and what's going on with the spot price and a lot of the news that's making uranium prices move around. And certainly invite you to take advantage of those if it's something you want to follow. And that's about all I got for you today.
A question.
Oh, sir.
Very good presentation. Question on your joint venture partnerships. If I understand correctly, 68 cents to the dollar they provide, 32% or 32 cents to the dollar you provide in a 50-50 joint partnership. So that's your management fee. Let's say a year from now, you're in production at the first uranium mine that hits, and it's a 50-50 joint venture.
Right.
Does it come back to the 32% for you guys in terms of income?
No. The way it works is a good. When we're saying 32 cents and whatnot, we're averaging together different percentages, right? Smart Lake, we own 21%, we own, or 27% is 20. So that happens. But what does happen is, so we always have those percentages. If we bring a resource or something to a resource estimate, odds are it's going to be time to hand over the baton and let somebody else operate the project, because we're the explorer. We still hold on to our 20, 27, 50%, what have you. And that's actually part of that is cast in stone in the ISO Energy deal. Let's face it, Cameco and Orano could outvote us and move us out of the operator chair anytime they wanted to. In the case of ISO, not so. We've cast that in stone. We are the exploration stage operators, and when we define a resource, we'll put a circle around it, and they take it the rest of the way. Sure. Yes, sir.
Which is the most advanced of your projects, and how advanced is it?
I would say it's probably Hook Lake. We've spent, collectively, we have spent, I'm going to say close to $30 million on that project to date. We understand it very well, but you saw the number of targets on that thing. It's insane. So I would say that that's the one where all we've got to do right now is keep reprioritizing and drilling our best shots. The Turner Lake, the ISO Energy property contains two properties of ours. One was Turner Lake and one was Red Willow. And those are projects that we actually staked back in 2004. And for the most part, we had them under a blanket for 10 years while the world didn't care. So in that case, now that we know about Hurricane the deposit sitting just off the claim line, and we now better understand a lot of the geology, there's been a lot of work done in that area. We've taken all of the geophysics and all the work that we did 10 years ago and had it recently recompiled and reinterpreted externally in connection with the ISO stuff as well. So we have a very new map, if you will, of targets that again, just need to be drilled. So all of that property has gone through all of those. There's been tens of millions of dollars spent on those properties as well. And we're at that point where, other than maybe filling in a few gaps, it's all about just continuously reprioritizing and deciding where you're going to drill next. So that's probably the order I would put them in. Our VP of Exploration is sitting at the back, ignoring me, so I'm not sure whether I said anything bad or good, or is that about right? There we go, thumbs up, okay. Any other questions? The young gentleman in the back.
How long have you been working with your brother? For those that don't know, these two are a package deal. They're VP of Exploration. These fellows are related. So,
well,
being committed, they're both into it.
Yeah, that story's been going on about 20 years now. And at that point in time, we were both well into our 40s. So it was kind of a new learning curve to figure out each other, because my brother had been primarily in gold exploration most of his life, and working for a lot of the majors on the gold side, and then with Orano, or the iteration of Orano at that time, when we started looking at projects in the basin. I think that the price of uranium was about $8 a pound when we started staking property. So it's been a while, and I spent the 20 years before that in tech. So this was a bit of an eye-opener to me. I mean, just different geeks, but it worked.
Say one more thing. I got to give you kudos for that uranium spotlight. I shared that with literally 400,000 friends.
Oh, really? It's not showing up in the numbers, Sean. What happened? Are they really friends?
But I'll tell you something. What everybody that has watched it, they're listening to it. They love the fact that it's not just a pitch on Purepoint. It's a beautiful podcast about the industry in general. It's not like going to a timeshare convention, is what I'm getting at. If you want to know about the uranium spot, the uranium business, it's a wonderful thing to listen to.
Yeah, well, it's one thing to keep people's attention over lunch, instead of trying to do it every week, just talking about us, I'll tell you. So, but there's lots to talk about. Thank you, Sean. I appreciate that.
Are you drilling uranium, or are you branching out other commodities?
We're pure. This is all we do. This is uranium, and it's only uranium in Saskatchewan. It's all we do. Alex, you had a question.
I was wondering if this presentation specifically will be on that website.
Janie, how do people get a hold of this website, or this presentation?
This presentation, I sent you guys. I will make sure that all of you get a copy on your emails.
It's essentially our corporate presentation, but a lot of these slides are without my golden tone, and words in front of it may not be meaningful to everybody. So some of the slides may be missing online, but we do have a version of this online for sure. Thank you.
Trading platforms in the United States?
We're on the OTCQB. Yep. We trade about 12 to 15% of our float trades down here. Yeah.
Just so everybody knows, the symbol is PTUUF, but because we just did a consolidation, that F becomes a D for the next 3 months. So it's PTUUD, and then it goes back to PTUUF.
Thank you.
Yeah. And again, we have a booth downstairs. We've got a ton of material. If any questions come up about any of this stuff, and Sean isn't handy to ask, by all means, just drop us a note, drop us a line. I think, I've got cards there, we've got things like that. So we're available for what have you, because obviously we like to talk about the industry a lot when we're not out drilling holes. Anyways, thank you again, everyone.